Hello investors, welcome back to the channel. I'm Mitali Toki here to simplify mutual fund investing and guide you on a smarter wealth creation journey. In 2025, the Indian equity market has remained near record highs, but not without bouts of sharp volatility. While headline indices like the Nifty 50 and BSE Sensex continue to perform, a closer look reveals a clear divergence in the performance of different sectors. Against this backdrop, investors are gradually shifting their focus. Instead of sticking to only diversified equity strategies, many are exploring targeted opportunities through sectoral and thematic mutual funds. As per the data from AMFI, sectoral and thematic funds net inflow remained resilient at rupees 20.52 billion as of May 2025, despite volatile market conditions. Interestingly, infrastructure and manufacturing sector funds saw a boost following the Union Budget 2024-25. This was because the government reaffirmed its intention to pursue capex driven growth. This has this has generated interest in Make in India, defense and logistic theme based funds. Conversely, the pharma and technology sectors, erstwhile investors' favorites, have not delivered high returns. This is on the back of global headwinds such as shrinking IT spends and uncertainty about pharma exports to the US. However, prudent investors who have long-term view on these sectors are taking advantage of the market volatility to build positions through SIP. Here are the three best sector mutual funds in India. We have shortlisted these funds on the basis of 5-year rolling CAGR and the robust themes these funds are focused on, and the sustained performance across cycles. First is the ICICI Prudent Infrastructure Fund. It was launched in August 2005. It is one of the oldest and most stable performers in the sectoral fund space. The fund is meant to capitalize on India's infrastructure development by investing in companies associated with sectors like construction, capital goods, engineering, power, cement, logistics, and utilities. The fund has a core allocation to large infra companies but also strategically includes mid and small cap names with high growth potential. The leading holdings are L&T at 9.88%, Adani Ports and Special Economic Zone at 4.46%, and NCC at 3.65%. As of May 2025, the leading sectoral exposure of the fund is infrastructure at 17.8%, bank at 9.9%, construction materials at 8.4%, and capital goods at 6.6%. Performance has been stellar in this market cycle. In a 5-year period, the fund has registered a CAGR of 33.46%. This reflects the growth of India's infrastructure as well as the fund manager's skill to pinpointing the major beneficiaries. Second is the Tata Digital Fund, which is a sectoral equity fund which invests in India's fast changing digital and information technology space. The fund invests in stocks that facilitate, create, or are beneficiaries of the increasing adoption of technology across sectors, from software services and semiconductors to digital platforms and cybersecurity. It has a focused portfolio that invests in scalable, export oriented tech companies, complemented by niche players in digital payments, cloud infrastructure, and AI. The largest holdings are Infosys at 19.8%, Tata Consultancy Services, also known as TCS, at 12.2%, and Tech Mahindra at 9.6%. Tata Digital India Fund is 80.64% exposed to the information technology sector, with a modest lean towards telecom and retail. Its 5-year CAGR is 29.65%, which shows resilience against volatility in the global tech market and highlights India's IT export momentum. Risk metrics show disciplined fund management in the face of the sector's natural volatility. Tata Digital India Fund has shown solid risk-adjusted returns as well as downside protection. Third is the SBI Healthcare Opportunities Fund. Established in July 1999, SBI Healthcare Opportunities Fund is among India's oldest and most mature sectoral funds dedicated solely to the healthcare and pharma space. The fund plans to ride long-term growth prospects in the space covering pharma, diagnostics, hospitals, biotech, and healthcare services both in India and internationally. While large cap pharma companies form the core of the portfolio, the fund also selectively invests in emerging players involved in diagnostics, API manufacturing, and healthcare tech platforms, providing a blend of stability and innovation. As of May 2025, the fund holds major positions in Sun Pharmaceuticals Industries at 12.7%, Divi's Laboratories at 7.3%, and Max Healthcare Institute at 6.4%. 88.44% of the portfolio is invested in drug makers, with the remainder spread across healthcare services, diagnostics, and medical equipment. The fund has railed with a 29.26% 5-year CAGR in 2025. This was due to a recovery in the hospital sector post-COVID, enhanced government attention to the sector, and rising insurance coverage under Pradhan Mantri Ayushman Bharat Health Infrastructure Mission. Now, to conclude, sectoral funds perform well for investors when there is a clear structural growth trend driving the stocks in it, and when the investor accepts the high risk and long holding period these funds require. Sectoral mutual funds are not for all, but for those who can complement sector insights with patience. These funds can deliver outperformance in focused bursts. The secret is in positioning your sector choice to fit macro trends, being pragmatic regarding volatility, and remaining invested over cycles. While historic returns might encourage some momentum chasing, the wise move is to invest over time in themes with enduring policy, structural, or global tailwinds. The greater availability of passive sectoral funds and ETFs has also provided retail investors with a low cost way to play on precise themes and enhancing accessibility. However, this calls for greater vigilance in following trends, valuations, and cycles. Finally, sectoral funds are best suited as a supplement to your core portfolio, not as a substitute. If you are convinced about India's infrastructure boom, digital push, financial sector overhaul, or healthcare transformation, then there is a sectoral fund investing in the same. The key is to understand the sector and stay invested long enough to allow that sector or theme to play out to its full potential. So, if you found this video helpful, don't forget to hit that like button and share it with your fellow investors. For more expert insights on mutual fund investments, be sure to check out our related videos and articles linked below. And if you're new to the channel, hit subscribe and tap the bell icon so you never miss an update on smart investing strategies. Signing off for now, invest wisely, happy investing. Mutual fund investments are subject to market risk. Read all scheme related documents carefully. Registration granted by SEBI, membership of BASL, and certification from NISM is no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.